great to be here today and definitely to chair this panel with two industry leaders. So I'd like to welcome up Jenny and Anthony to the stage. Jenny Fagg, everyone, to be founder and CEO. So an emerging fintech solving a unique problem in our market. So catering for the over 55s market and effectively supporting the bank of mum and dad. So welcome to Jenny. It's also my pleasure to introduce Anthony Baum, CEO and founder of Tic Toc. Welcome, Anthony. Obviously, Tic Toc, an established fintech, probably no stranger to this crowd, and operating in both a B2C and B2B market. So today, I guess we're discussing how fintechs have and continue to disrupt the home loan segment. And I think particularly given the current market, we've got inflation on the rise, interest rates on the rise, customer sentiment is on the down, and then we have a slowdown in housing activity more broadly. So today we're going to be talking a little bit about how does the segment respond to these challenges, and also what does the future hold. So I think I'll kick off with that. And let's start with, I think effectively in our market, it's the race to the fastest unconditional home loan approval. That's the focus for many of the lenders in the market. And, do we need it to be one day? Do we need it to be 10 minutes? And along with that, how are the customers feeling about that? So I think, Jenny, if we start with you, To Be offers a unique niche service to their clients. And so can you tell us a bit about the opportunity, I guess, as you see it, and how To Be are finding it?
Great. Thanks, Kellie. So yes, Jenny Fagg, former banker. I was the CEO of ANZ National Bank in New Zealand, then went across to Canada and ran the P&L for one of the big five banks there in retail. So my PhD is in credit risk, so kind of a hardcore banker. We set up To Be, myself and my colleague Brian Hart, the former CEO of Westpac. And you're right, we are completely niche. We are very focused. We're offering home equity loans to affluent Australians over 55. We started off in terms of, a fast, seamless home loan. We started off about a year ago, assuming that we would need to be able to settle a loan the same day. So we are an asset-based lend. Our customers have securities of $1 million or more, and we take out a first mortgage. So we thought, okay, it has to be digital. These are adults. They're over 55. They've paid off their home loan. We need to give them access to their funds in the way that they would want. So we've set the process up. Application can take 20 to 30 minutes, and we can get funds into the customer's account same day. We've done that once with a family and friend. The amazing learning is that feedback from our customer research, as well as talking to we're very recent, so our new customers, they don't want same-day settlement. Setting up a new business is very humbling.
And I think that's the thing we've been discussing, isn't it? How quick does it need to be? Yes. And interesting that in some segments, and particularly yours, it does not need to be one day.
Prior speakers have talked about getting your niche and really understanding what that market opportunity is. For us, it's obviously not speed to market or convenience. So standing back for us, we're here with a purpose, which is to help over 55 access the cash that they've built. That's really what we're here to do. And it's this confluence of forces. So I am the last year of the baby boomers, so I actually am target market, which helps. So FinTech with a 58-year-old co-founder. We own 46% of assets in Australia. We have 2.3 trillion of home equity, and it's basically a market that's not served. Because of the responsible lending regulation, banks have interpreted that to mean that you should not give loans to people who are more mature because they can't prove income serviceability. So there's a big issue where people have assets, can't prove income. So that's the second factor with the regulation. Third factor, you mentioned Bank of Mum and Dad. 60% of first home buyers have to have help from mum and dad or a family member. Most of this is done unregulated, definitely unregulated, but not documented. There's no legal right from the parent to the child. And so we've got this lack of education in this enormous lending pool. It's one of the top biggest lenders in Australia. And then finally, we have people like Tic Toc. Not that we are a customer of Tic Toc, but we have people...
Not yet.
I'm trying to work out who buys the first drink here, but anyway.
Me.
Oh, excellent. Then it will be very expensive. But then the fourth wave then is we have this technology and we feel no need to replicate what others have built so brilliantly. So our business, we have a niche, home equity loans over 55, with a premium brand. So it's affluent Australians, can't get loans because of the regulation. A use case, people can use funds for anything. A use case is that Bank of Mum and Dad, and we provide all the education and training and tools and legal templates to help them manage that. And then we reach out to our partners, and I know we'll come back to partners, and we ask them to provide the technology for us. Obviously, we own the analytics, the data, but we need help from others because that is not our strength. That was a long introduction.
No, that's perfect, Jenny, and I think you're right. So obviously on the other side of our panel today, we have Anthony, who's well experienced in this, and Tic Toc, established brand and evolving and changing as well, Anthony. And so maybe you could tell us a little bit about what's been happening in the last little while and the opportunity as you see it in this current market that we find ourselves in.
Thank you, Kellie, and thank you, Jenny. I was really keen for Jenny to go first because actually there is a real problem with the Bank of Mum and Dad. I think there is an education problem and it's about to materialise as customers do get into financial difficulty in the current market, and they'll realise that they may have made that decision not necessarily on an as-informed basis, so there's a big education role. And I think when I found out you guys existed and saw what you were doing, I thought that aspect of what you were doing was fantastic. And it actually in many ways reminded me of where we started with a much bigger market in 2017, and that was to prove it was possible to create a home loan experience that could be completed by the customer in real time. They could be assessed as they applied, and could be truly approved in a same day. That was our goal. We launched in 2017, and it was a market that was very much in its infancy from a digital perspective for home loans. Complex product, big decision, but we were very focused on building as awareness as cost effectively as we could in that market and focused on the tech. The one thing that we have done that is very different from any of our competitors since, other than the banks themselves because they already have a balance sheet, and that is that we chose to focus on the customer experience and the technology and actually partner for the provision of balance sheet. So when we get to partnerships, I'll actually talk about what that looks like. Today, Tic Toc is both a digital home loan proposition that is our proving ground, and we are evolving that proposition constantly. And in fact, this month we launched an evolution of our platform. We've integrated into AFG and their Flex platform and are pre-populating a customer 100% into their Flex platform, so that for those customers that aren't eligible for the Tic Toc home loan, we can actually still help meet their needs. That is, we'll see our B2C business evolve, but very much our focus is on our technology. We have 17 enterprise technology customers today, using Tic Toc's platform as a service or using a module of our platform on a software as a service basis. Our customers include 2 of Australia's 5 largest banks, and we're enabling them to create better customer experiences for their customers, predominantly in financial validation, serviceability, and really the really hard elements of financial assessment that are associated with risk management and responsible lending. The goal of Tic Toc is to basically, through the proving ground, enable customers, and then from what our technologies are able to achieve, and then enable the market. And that's what we're doing with those 17 customers. And we see that as, very core to our future.
Yeah, and that bit is interesting because we've talked a little bit about the evolution of this segment of the market, but maybe, Anthony, while we have a look at the challenges that, effectively you've faced since 2017, we've had lots of new entrants, including obviously Jenny and To-Be, but can you run us through some of the challenges that you've felt in this particular digital home loan approval, faster, cheaper technology? Just a few, maybe the top 5.
Oh, look, you start a business. We started in 17, so that meant it never been done before in the home loan space. So first mover advantage is a big advantage. But there were a lot of disadvantages. The capital pools that were available 2 years ago to someone entering the market at that point weren't available to us. Mm-hmm. VCs weren't really investing in fintech in 2016 at scale, when we first raised capital through the partnership with Bendigo and Adelaide Bank. But really the key things were, and I thought Joseph Healy summed it up. What are you focused on? Prove that there's a business model in that. Get to profitability, which we did in November last year. And then evolve from there. So what happened with Tic Toc, and it's a really interesting story, is our biggest risk when we launched was that we weren't perceived as any different. Mm-hmm. And what happened was we launched on Sunrise, got on Sunrise with Koshi once I convinced him that it was possible what we were doing. And we went nuts. All these applications, market awareness, noise, and then the industry is amazing. To the other point that Joseph made is that it's a very big profit pool. And so what happened is the industry started marketing 4 to 6 weeks after we launched with big campaigns, pre-approval in 10 minutes. Mm-hmm. It was actually an attempt to ensure that we weren't genuinely perceived as being different. And so what we had to do was really, focus on refining what our model was going to be. And it was actually, that was the point of realization where we really need to focus on the tech, customer experience, automation, seamless experience, and fastest, and forcing a customer to be that fast, I agree, Jenny, is not the path. But yeah, that's the option. The option to be that fast is key, but you have to accommodate for a broad enough cohort of customers that they're comfortable with the experience they're going to have digitally. Otherwise, what they'll do is your conversion rates will mean your economics are not functional.
No, and I imagine you wouldn't have had the funds just to go up against that, kind of above the line marketing either.
Correct. So we just focused on the tech.
Yes.
And it was actually, frankly, a good thing that happened because it led to where we are today. And we really, we are very, very passionate about working with our customers to help them solve their customers' needs in terms of enabling the market. And with some of those customers, we courageously building functionality that does not exist today. And then but we have the ability to enable other customers with that functionality once it's proven as well.
Yeah, and we're going to get onto partnerships in 1 second, because I think it's interesting, again, the way the two organisations operate. But before we do that, Jenny, you're a new market entrant in an established market. So maybe you could tell us some of the challenges that Tabea have faced in these first kind of launch and pre-launch. Obviously, there's a long time before launch. So maybe a few of the challenges you've had there.
Yeah, so thanks, Kellie. We've only just gone live. In fact, we stood the lending platform up quickly. We actually are putting loans on our own balance sheet, though we will move to a off-balance sheet over time. So we had expected the challenges would be to set the tech up and get the regulatory compliance in place. In fact, regulatory compliance we did in record time. So we took the traditional reverse mortgages and turned it on its head, and then we've set up a 5-year fixed term loan. The regulators are really supportive. Thank you. And so, Tic, tech stack, we've got great partners, Nemo, and we'll talk to later, and a number of great partners. So surprisingly, actually getting the core product set up and functioning was okay. It was a big project management, and that's what you do. The brand, I'm biased, of course. I think our brand is beautiful. It's appealing to our target market. We weren't sure we'd manage that, but our target market are healthy, active, over 55s who are getting on with their life, and they're doing it damn well. Thank you very much. So we've got those. In terms of the challenges now, because we do have loans, funding, as Anthony has referred to, particularly in the last few months, not exactly the most auspicious timing from a funding perspective, just to be worked through. The other one is marketing and distribution at scale. So we started off direct to customer, which we still have, but without the huge budgets I'm used to, of course, in big banks.
Yes.
So we quickly have rolled out a referral program as well. So we're looking to financial advisors, mortgage brokers, accountants. Took us 6 weeks to set the program up, and compared to what would have been probably 2 years at a bank, but it's all legally documented, and we set up a spot and refer fee. So because we are such a unique specialist product, we don't want kind of just untrained people doing the vulnerability screening and talking to the customers. So the challenges, distribution at scale, which we've had to adapt really quickly, and then the challenge everyone is facing, I think, with the lending book with funding.
Yeah, perfect. And then I think, we've talked about partners in previous discussions this morning. We've heard a lot about partners, how to partner, who to partner with, how long do you keep a partner, etc. So I think, Jenny, whilst we're with you, tell us some of the partnerships that you've established and name names if you wish, but why they've worked for Tabea.
I'll name 3.
Sure.
I will start with CoreLogic, at the risk of, kind of sucking up to one of the sponsors of the event.
We'll take it.
We talked early on, because we don't have unlimited funds, we knew we needed to have a very targeted access to our customers. They need to be over 55, have a property worth $750 to $1 million. So we're talking specific houses in specific streets of specific suburbs, and CoreLogic has helped us with that, along with our valuations. So we've set up an industrial strength platform assisted by CoreLogic there. The second partner I'd call out is Nemo. I don't think Leanne Jones is here, but Leanne and Peter are a FinTech themselves. They've set up a loan origination platform, tailored. They have a base product there, but they've tailored it for our unique needs. And it's more than just a partnership, like we sit in their offices when we're in Melbourne, and they spend a lot of time with us. So that is the only reason that we could stand up our tech stack so quickly. And we're plugged into all the best-in-class providers. That's the second one. A third one is less obvious. In fact, I had an existing arrangement with a company called Stay or Go. They provide a comparison site. So it's up and running. Currently does credit card comparisons. It's moving to home loan comparisons. So with the wave of fixed 5-year or fixed term home loans coming through, it's a big issue around retention. So I got off the track. Stay or Go has built our kids' calculators for us. Now that is something that is incredibly detailed. So if you have an adult child who's looking to purchase a property, they can go onto our site. It will tell them if they can get a deduction from first home buyer grant. It'll show them stamp duty. It will discounts from LMI if they get below 20% lend, the number of years to buy a property, what the property will be worth in 5 years' time if they buy it then, not now. It's really intricate stuff that pulls from lots of open data sources. Anyway, so Stay or Go is the third company who we've partnered with. They're not an obvious one, but they have given us the real edge in the kids' calculators. So if any of you have children or think of buying a home, tubi.com.au, go to the kids' calculator. Or if you're a kid who wants mum and dad to help you, more to the point.
Great. And I think some of those partnerships, as you say, you're a fintech, they're fintechs, it's great to see that evolving and have the flexibility and almost be nimble to suit your needs as you establish and then grow. So that's terrific, Jenny. And Anthony, for Tic Toc, it's almost, if I could say, full circle. We partnered with people, now you're partnering with others in terms of your Tic Toc enterprise service. Tell us a little bit about partnerships for Tic Toc.
So, Kellie, if you think about what is a modern capital T fintech, it is really a variation of a platform. So, what is a platform? Is it connects products and services, and it delivers revenue in various ways across those products and services. So we consider ourselves a platform. And so we look to partner with brands, and there's a number of brands that we are partnering with that are really exciting. I won't talk about them here. But we also partner with lenders, and that's both on a software as a service basis and on a platform as a service basis. So, for example, the Ben Express digital home loan, the Up Home digital home loan, that is Tic Toc. So, in the case of both of those products, they run their own web environment.
Yes.
And then when you click apply now, that is us through to settlement. We're obviously partnered with a settlement agent, but through to approval, it's all our proprietary tech. So very much we're enabling lenders, and there's a couple of examples. And then we're enabling others, and that's becoming really exciting, where new innovative products are entering the market and they are looking for a tech partner who can provide good lending or customer validation capability through modern API architecture and are able to leverage off the products that we already have in market in that space. And, there are a whole range of scenarios evolving there. We deliberately don't name our SaaS customers because it's about their businesses. We're just enabling them. So, but there's 13 in total. So the other 4 are platform as a service partners, of which 2 are in market, 2 will launch in the next 6 months or so. And coming back to digital disruption, I was just reflecting on the conversation so far. Just lifting it up a little bit and who we partner with. I have a view that the market is basically at the point where it's going to start breaking down into brand, technology and balance sheet. So on the brand side, if you think about the Tic Toc platform, you can literally plug any lender that is prepared to partner and connect via API and let us do all of the origination through our technology to any brand in the marketplace. And what I think we're going to see in the next 12 months is as the banks start announcing they're going to be launching digital home loans in 23, 24, we're going to see brands with millions and in some cases tens of millions of customers actually launch digital home loan propositions, leveraging their website, their brand infrastructure, their connection to the customer. They're going to run embedded product with their other services. And I think that is actually the most disruptive thing that we will have seen in the market for a very long time. And I can't say who those partners are, but I can tell you it's imminent.
And so I guess that, kind of leads us to, my next question was about looking into your respective crystal balls to talk to us about how you think fintechs will evolve in this home loan segment in the coming, kind of 12, 24 months and maybe a little bit further out. So one of those things is what you've just talked about, Anthony, but what else do you think is the opportunity for fintechs in this segment in the next few years?
I think it depends. Are you solving a consumer problem like Jenny? Or are you solving an industry problem as a capital T fintech? So our focus is the latter. We obviously, we've partnered with Bendigo for balance sheet. That's very public. They own 26% of us. They're an amazing partner. But we will partner ultimately with other lenders as well and do. So for us, it's actually, we see our ability, the opportunity is to evolve our platform so that it is genuinely solving the industry problems in a way that is easily consumable, but within the industry more holistically. You need to prove it's possible, and then you need to make it available in a way that is easily consumable by that organisation. So I think those that are in that pure tech space that are generating propositions for the existing industry cohort that have capital, have customers, have scale, actually have a really bright future, so long as their product is 5 to 10 times better than the incumbent service that does the same thing. And then there will be some players, and Jenny can probably talk about this more, that are solving an industry problem that hasn't yet been solved and get enough runway with that.
Yeah, great. I guess, Jenny, it's a very unique position that you sit in, as I said earlier. So maybe you can also share with us, what are you thinking? How does this evolve in the next, 12, 24 months?
Great, thank you. Yes, so Anthony, I agree with you in terms of if there's going to be big players out there with tens of thousands, probably millions of customers, it's going to be really easy for them to plug in and provide really good credit services. We could do it in about 6 months, in terms of setting it up. So that can be quite terrifying for an incumbent bank, I would say. Having said that, generally I think the real opportunities are in niches. Like we are obviously a niche, very narrow. I mentioned earlier there's 400 billion of fixed rate finances over the next 18 months or so across banks. That's 400 billion. That's banks trying to retain customers. So the company I talked about earlier, Stay or Go, for example, you have little companies like that are set up and they're, really focused on solving that single problem. So, and there's a few of them around who I think are just that focused that will help. Interest rates going up, it is going to be hard for, mid-sized lenders. So it's quite possible there'll be consolidation. I would see coming. The other one I'm not as worried about at this stage is bad debts coming through as in prior cycles. So once again, I'm a credit risk hack from way back. It's feeling more comfortable there. Normally at this time in the cycle, the opportunity is to buy a collections recovery service. I'd say it's not feeling quite as extreme at this stage.
Okay, great. We're just about out of time, but is there any questions from the audience? Please go ahead.
Absolutely love to talk about the loans into marketing Australia.
So I think the question is, can you tell us a little bit about the technology inflection rate? Is that what you're talking? Yeah.
Essentially see it as the technology inflection point, the incoming one, the next wave that drives it.
The next wave, Anthony.
For us, the experience is driven by the automation. So really at the core of our platform, it's data access, wish we had more, enrichment. All of our enrichment is proprietary. You know, we have a 12-person data science team and machine learning team, and that's what they do. They enrich that data. And then basically we then apply automation over that data. And that actually is what powers the customer experience. You can create a digital home loan that looks digital and have lots of people in the background, and for the consumer it will feel digital. Your cost structure will look like the traditional industry. It's actually that true enrichment and automation that is the core building blocks of the next generation of technology product that will enable the whole industry to serve their customers and do that in a way where the cost problem is solved. And I will, if I may, share a little bit on that. So, you know, through our platform, we have approved customers within like 3 minutes of them submitting. That is a fact. Now, that is because effectively we're true exception-based fulfillment, which means all of that enrichment and automation has run. And it is then actually, once it's run, it's identified and shown to the assessor that's picked up that customer straight away. In this case, sometimes they're not picked up straight away, but it's picked up straight away. That this is the one business rule or two business rules that it wasn't able to sufficiently validate and confirm had passed the underwriting rule set within the platform holistically. When it comes to things like digital validation of income, and in home loans, you know, we're looking for 14 different income types in people's data. You know, there is, you know, we're achieving quite high automation rates on that aspect. And so it's really in that core build-up. And then if you think about, if you buy Tic Toc's Xi Validate product, and this isn't a sales pitch, it's just to give context, all of that enrichment, automation, validation that's been run over the billions and billions of dollars through our platform, both as a software as a service basis and as a lender ourselves, is actually out of the box. So if you take that service, you don't have to start from scratch. Okay, put in Salesforce, develop a model. You just plug it in, adapt the rules to your needs, and basically pick up that efficiency level straight away. So, you know, we think that it's a really good question because that's actually at the core of it. Then the UX experience, you know, how many pathways you want to create to fulfillment, customer journeys. You can potentially run that with a completely separate team internally, you know, and then just bolt on to those external services, others or ours or others, that actually serve your needs to deliver your customer experience. Does that answer your question?
Okay. Yes, please go ahead in the front there.
There's a lot of automation, digitisation, data enrichment, etc. I'm just interested in your view around the role of the broker going forward and, assisted loans. Like, where do you see that in the future with so much automation and digitalisation coming through?
Yeah, so the question was, where does the panel see the role of the broker moving forward in this segment? Jenny, maybe we'll start with you.
Sure, thanks. Be aware 70% of mortgages are now written through brokers in Australia. I went overseas for probably about a decade. It came back and it had gone from about 50% to 70%. Somewhere in there, banks lost trust of customers and clearly didn't have the flexibility of service. I actually don't know what the answer to that is, because I'm surprised it's as high as 70%, given it is so easy, so straightforward, so standardised. So I think the role of the broker will stay really, really dominant. But you'd think there may be a way for data with open banking to be made more public for alternate models to come in. So probably still intermediated between the banks and the end customer, but I think there could be different forms of that, of who's providing that intermediation. Yeah, like comparison sites could get more popular, or digitised packets of credit packets that banks have to bid on. There's a little bit of that coming out in the market now too.
Unfortunately, we've run out of time, and I'll take Anthony's nodding there that he agrees with Jenny.
Oh no, I'm into. We've just became a broker because we now need to solve the brokers' problems technologically. I think there's a huge opportunity to serve the brokers better.
Yeah.
So please join me in a warm round of applause for Jenny and Anthony. Thanks so much.